This is Agriculture Today. I'm Samantha Bennett with the K-State Radio Network. Ahead of us today on this Monday morning, we start, as always, with our latest cattle market update. And this week, we're hearing it from K-State livestock economist Glynn Tonsor. He shares with us the latest cash cattle markets, futures contracts, and box beef cutouts, as well as processing status. Also ahead, Terry Griffin, K-State cropping systems economist, discusses cybersecurity in agriculture and best practices on the farm. We end with this week's wildlife segment on Dredging Ponds with K-State aquatics and fisheries specialist Joe Gerkern. He covers what you need to know about when ponds should be dredged, how often, as well as some anticipated costs. That and more awaits us today ahead on Agriculture Today. Good morning and welcome back to Agriculture Today. Today we're starting off with our cattle market report, as always on Mondays. And today we have with us Glynn Tonsor. He is a K-State professor of agricultural economics here. So Glynn, thanks for joining us.
Oh, thanks for having me on.
Absolutely. So let's get started. Let's jump right into things. We've got, like I said, our cattle market report for the week. Let's start with the cash cattle markets.
Yeah, so AMS called the fed cattle market here in Kansas at 137. That's just less than $1 lower on the week. When we look over at feeder cattle, AMS called the Pratt, Kansas market, this will be a Thursday report, $3 to $5 higher than 2 weeks earlier. And here's why I remind folks, holiday effects. So AMS usually doesn't quote, or it's very low volume around the 4th. So we're compared to 2 weeks ago on some of these. A specific lot, I always like to write down at least one lot to give people a specific example, was 116 head weighing 865 pounds, sold for $170. I think it's useful to contrast that with the futures market. So CME, the futures market, they closed Friday. In this case, we have both August contracts. Live cattle was 134, down about 50 cents for the week, so not much movement. And then feeder cattle for August were 172, down almost $3 for the week. Yeah, you put a bow on that. There wasn't a lot of action. Keep in mind, we're coming out of the holiday. We still have a large supply of cattle that's entering into this. We've had some feed grain improvement, which has overall been helpful for feeder cattle, and we saw that in the cash market, but on the board, that didn't carry through. So I look for that disconnect to be resolved this coming week.
And then in terms of the box beef cutout, what have we really seen change-wise there within the last couple of weeks?
Yeah, so we saw a little bit of an increase. So choice box beef closed Friday at $268. That's up $4 from the Friday before. Select box beef was $242, up about $1. We've been hovering in that arena for some time now. The meat complex overall has been under pressure. We're going to break down some demand numbers when we wrap this up. But everybody's watching the box beef to see if there's more slippage there. It was nice to see this past week choice beef came up. We hope that continues.
We're wrapping up summer. It seems like it's flown by at this point. We're only in July still, but I know the rest of this month will fly by too.
Yeah, and embedded in that is grilling season, right? Mm-hmm. So 4th of July is behind us, but at least here in Kansas, we have a couple more months of typical, grilling weather. Mm-hmm. I think I made the comment last time we did this is nobody likes to grill when it's 103 degrees.
Yes.
So it's one thing to be in summer. It's another thing for it to be, comfortable to be outside. Mm-hmm. And I don't want to get into weather politics here, but that does enter into how much grilling demand, interest there is. But we're calling for a hot 10 days here in Kansas ahead of us, more generally for the country. Hopefully, folks are able and willing to go out and grill, and that would lead to some additional demand side support, which will show up in higher choice and select box beef if that occurs.
Absolutely. So we've kind of touched on this in the last couple of weeks in terms of processing status. What have we really seen in the past week?
Yeah, so the system's full. These are holiday impacted numbers, but specifically USDA's initial estimates through Saturday were 593,000 head slaughter. That's a little bit ahead of a year ago. For the same week was 581,000. Again, note that's holiday reduced. Normally these numbers are, in the mid 600s. With the holiday we had less throughput, but it sets the stage for and there's a lot of commentary on this. Daryl Peel, my colleague, it's on this series and so forth, just recently had a piece. The second half of 2022 is setting up to be quite a bit different than 2021. And a lot of that starts with the fact that we're going to have fewer animals to process. So the system's going to be less full as we go from now till Christmas. And that's going to be important to watch. And what does that mean for fed cattle prices and the like?
And then we've got, obviously, a lot of upcoming reports of note. I think the WASDE drops tomorrow, actually. But we've also got other things that might affect our cattle market as well coming up as well.
Yeah, so we always watch the cattle on feed report, and I just talked about inventories. We're going to continue to do that and see what is the rate that we're slowing down. Basically, the statement about yards are full. The next report comes out on July 22nd. That's nothing new. We watch that every month. But the one that doesn't come every month is the cattle inventory report. Most of our listeners know that's done in January and July. The July one, the mid-year report, is also due on July 22nd. I highlight that, and I try to highlight it anytime I'm on and it's coming up, but I'm particularly highlighting it because there's a lot of interest in what is the latest estimate on the number of beef cows that have been sent to market. What does that mean for the current and upcoming calf crops and so forth? And we'll get an additional national look at that here, as I said, on July 22nd. Our listeners need to watch for that as well.
Absolutely, especially in light of, we talked about it, I believe it was last week with Daryl Peel, a lot of the herd liquidation that we're seeing across the country. So when we're thinking about that cattle inventory report, is that something we need to be looking out for?
Yeah, yes. So that is an additional way to summarize that. So it's one thing to quantify the animals that are going into the market. It's not, that's part of the picture, but not the whole picture, is how many are left back on the homestead, and that's what this report gives us another update on. Everybody knows that we've increased slaughter of beef cows this year. The million-dollar question is how many are left behind, and what's the calf crop going to be in 23 and 24 because of that. So, yes, and lockstep in with what Daryl was saying, I think this report, probably even more than most July cattle inventory reports, is going to get watched.
And then you mentioned we're going to talk a little bit about supply and demand a bit more, so let's touch on that.
Yeah, so before we go to the beef demand, let's stay in the live animal space here for a moment and talk about the feedlot returns. So your supply comment is, the number of animals that are in the yard still impacts us, of course. But most of our listeners know that every month on our Ag Manager website, I put out these feedlot returns series, and I'm taking information from our Animal Science and Industries Department, mirroring it up with a bunch of Kansas market information, and trying to approximate what somebody that is in a unhedged, just paying cash for corn, cash for feeders, and getting cash for fed cattle situation would be. And my latest numbers were as of July 8th. So last night I updated these using the Friday market information. And what I'll highlight is the losses are greatest here in the month of July. And these are projections for July because, of course, July is not done yet. But my latest estimate is a loss of $150 per steer, which stands out quite strongly. That reflects the fact that fed cattle prices have declined, and yet we have high cost of gain. 123 is the feeding cost of gain that's behind that number. As you look out through now till Labor Day, I continue to project losses for steers will be leaving yards between now and then. And then the story changes. The month of October is the first month. It's a plus $25 when I'm projecting a positive return. And it continues to get better until December, which if you read down this, and I know it's fine print, it's early in the morning, Samantha, but December is 145. So the story changes notably by the time we get to Christmas is animals leaving the yard. Well, what's underneath that is a notable expected increase in cattle prices. So for context for our listeners is those animals leaving the yard in July, I'm projecting are going to sell for $134. And that's the fourth column in these tables for those that look us up on our Ag Manager website. When we go all the way down to December, I'm projecting those steers that leave, think Christmas steers, are going to be $151. So a notable increase, and those in the countryside would say we've been waiting for some time. There's been slippage, but regardless, a $17, $18 increase in sales price while the cost of gain is also improving from a feedlot's perspective. So the cost of gain is coming down. Both of those notably improve the margins. And for those that followed me, we're talking a $300 swing going from a loss of $150 to almost a gain of $150. Again, these are projections. But anytime you have output revenue going up in these projections and the cost of adding weight going down, those are both very favorable trends if you own the cattle in their feed yard, and this series is pointing to that. So to put a bow on that, Samantha, the next couple months look rough. They've looked rough for a while. The month of July has gotten quite a bit worse over the last couple months in these projections. But as 2022 progresses, as supplies tighten, as you teed this up for, if beef demand holds up, it looks like cattle leaving the feed yard are going to have positive returns with them.
You mentioned quite a few things that go into an increase in what we're going to see producers actually get back in terms of their total net return. When it comes to them anticipating that, is there anything they should be keeping in mind?
Yes, you should always keep several things in mind. But before I even answer that, I'll remind folks, all these numbers are presuming somebody is not hedged. So you're getting the cash price for fed cattle when they leave the yard. You're paying the cash price for feeders when they show up, and you're buying corn as you need it. Narrowly, I do this as cash price each month that they're in the yard. So each of those opens the door to potential hedging opportunities. So if grain falls and you think it's a good deal, you have the opportunity to lock in cheaper grain than you expected via futures hedging or forward contracts with the elevator, however you like to do that. On the output side, which is usually where that discussion starts, is you could forward contract with if Packard's buying your cattle. You could use CME products to, hedge and so forth. You're left with basis risk, but it mitigates the majority of your net revenue risk when you do that. So there are those price management options. They're always there, and most of our listeners are well aware of those tools. But the most important part here in responding to you is this series presumes you're not doing that. Mm-hmm. And because of that, the variability, so the projected losses and the projected gains are going to be wider in this series I'm putting out than anybody that's regularly hedging. Regularly hedging mitigates price variability, so your realized outcomes are more narrow. So those that are regularly hedging probably are not going to expect and experience the loss of 150 here in July. But that same operation doing the same thing is not going to expect and realize a gain of 150 in December either.
Good to know. Well, you mentioned already that all of this can be found on Ag Manager, and I'm sure lots of listeners already know about Ag Manager as a resource, but if you could go ahead and explain where people can find this information.
Yeah, so Ag Manager, it's literally AG and then the word manager .info. That is our main repository of information for the Ag Econ department here at K-State. Myself and several others in the department that have an extension appointment, either formal or informal, engagement with the extension, have our own segments that are on there. The vast majority of yours truly stuff shows up under the livestock and meat section. So if you go to Ag Manager, there's lots of ways to get here. You could go to the contributors page and find my name, and you'll find the stuff I've most recently been updated. That's one way to do it if it's something you're specifically looking for. You could also track down under livestock and meat the subheadings. There's a cattle finishing returns heading, and that's what we just got done talking about. In that same place, you go to livestock and meat. You can also find a meat demand section, and we're going to talk briefly about meat demand here. As underneath there, you will find regular updates on beef demand and meat demand more generally at that same place.
Excellent. Well, Glynn, as always, thank you so much for your time. And listeners, as he mentioned, the Ag Manager website, it will be linked in today's show notes as always, and those can be found at agtoday.net. For this week's cattle market update, that was K-State Professor of Agricultural Economics, Glynn Tonsor. We'll be back with more ahead on Agriculture Today. This is Agriculture Today. We are back now, and we have with us Terry Griffin. He is a K-State cropping systems economist, and today we're going to be covering cybersecurity on the farm. So, Terry, thank you for joining us.
Well, thank you, Samantha. It's a pleasure to be here.
So, agricultural cybersecurity has really become a rising concern. More and more of the industry really becoming more digital and becoming more adaptable to that sort of thing. So, is agriculture really growing in this way, do you believe?
It definitely is. I have talked to farm operators who have purchased cyber insurance, for instance, in the event that data are misappropriated that are coming from their farms. And there have been conferences recently where we have talked about cyber insurance being bought by agricultural retailers, farm data companies, others in the realm of farm data. So it actually exists. It's not just a concept anymore. It's real.
I feel like when we talk about cybersecurity on the farm, it isn't just a concern for major agricultural businesses. Like, I think the first thing that comes to mind is maybe JBS and the cybersecurity attack they had last summer. But really, it's an issue that can affect all producers when you think about it, right?
It is. And we got to really think about who, as a producer, who is my biggest threat, or what are the list of potential groups of people who are a threat to me. And so it could be as simple as someone getting a copy of the data that they have. If we're in the Eastern Corn Belt, Illinois, where farmland is in a fierce market, then a competing farmer with the landowner may be our biggest threat. Mm-hmm. And we don't want the competing farmer to get access to some of our insights. And in that part of the world, a landowner would likely have the data because, it's been said that if they have to ask for the snow to be plowed off the roads and it's kind of too late, you've already lost a farm because it's going to go to someone else next year. In Kansas, the farmland market is fierce, but it's not as fierce as it is in Illinois. And so the biggest threat to a Kansas farmer may be seen as a different entity. And so it really depends on the location and also on the risk preference of the farmer, who their biggest threat is, who they do not want to get access. But that's misappropriation. Cybersecurity could be also when data becomes inaccessible to the farm operator. It may not go to a third party, but the farmer may lose access to it in that they need it for farm management, decision-making purposes, or reporting for compliance.
I feel like anytime an entire system is shut down or producers don't have access to the equipment even potentially that they need to access, that's of the utmost concern.
Yeah, it's not necessarily cybersecurity, but one issue that I'm working on right now is space weather. And the concept there is there could be solar flares, sunspots, that impact what goes on in the ionosphere. Mm-hmm. There's a paper that I worked on with the Aerospace Corporation where I visited about this on Agriculture Today a year ago or so. Paper's coming out soon, and we looked at that very thing. If there is solar flares that impact space weather in the ionosphere, that could adversely affect GPS. Mm-hmm. And in that event, we may be at a disadvantage when it comes to planting because, we don't have row markers on our large planters anymore. Spraying equipment, same way. We can still harvest, but we may not be able to log data if we don't have the GPS signal to have georeferenced log data.
Sure. So some definite concerns over efficiency even in those cases when we think time is of the essence for a lot of these producers. So,
and if we opt to not plant today because we cannot have straight rows or be able to control the skips and overlaps, we wait a day, that could have implications for lower yields if we have to make up that day in June instead of April 15th.
When you think legal protection when it comes to this farm data, is there really any laws or regulations out there in terms of that?
I worked with a group of attorneys who are largely in departments of agriculture, economics, other land-grant universities about the very topic, and did some searching, and we wrote a paper that became publicly available in 2019. And as of then, and I believe it to still be true, that there is no state or federal laws that kind of govern this idea. And so the attorneys in this paper would suggest that, well, it's not something we can copyright. And it doesn't follow patterns that would allow us to do protections like patents or trademarks. And the paper, which our listeners may be interested in retrieving, I can send them a copy, and it's available online. It was published in Drake Journal of Agricultural Law. Actually, Alexson was the first author on that. We do make some suggestions to farm operators on how they can protect farm data, and one is treat it like a trade secret. Mm-hmm. In order for the courts to view something as a trade secret, then the person who controls what they want to be a trade secret must treat it as such. And that doesn't mean that they can just say it's a trade secret and move on. They've got to go through great lengths. Classic example is the formula for Coca-Cola. There's only a handful of people who know what it is. Only a handful of people can access it, and it's safe. And they had to go through some great length. It doesn't have to be those types of severe, extreme examples, but the farm operators do need to treat it as a trade secret. And that's one thing they suggested in this paper. Another one is to have employees sign non-disclosure agreements, NDAs. Maybe change passwords quarterly. Working for a university, we're sort of forced to change passwords. You've been here a month or so. Every 90 days, I believe, we've got to change our passwords. Something like that would need to be instated at the farm level as well. And make sure that if an employee leaves, that all of their connections to farm data have been stopped. Mm-hmm. Again, passwords changed and that kind of thing. So there are some actionable things that farm operators can do to protect data if they want to show that it does have value, in the hope that they would be considered a trade secret.
Well, these are even just good practices to do anyways when we're thinking about, even if you're not going to try and treat it as a trade secret for, government ruling, just the fact that you're going through these daily practices, really, in some cases, it's a good idea.
I would agree. It's a best management practice, BMP. And just like we have best management practices for production or even environmental aspects when we're growing crops, it's a best management practice for data management, protecting information, cybersecurity.
You mentioned quite a few of the tips already in terms of changing passwords, simple things like that. And it might seem overwhelming as producers are hearing this, being like, I have to do all of this all the time. But really, these can be small implications that you build up over time. Is that correct?
Right. It wouldn't be something that we just go in and say we're going to do a structural change to our business today. My experience there is that those may sound good, but then 30 days later we forget. To restate that, you're describing, let's make it a habit. Mm-hmm. So if we do the first one for the next 30 days or some sequence like that, then it becomes a habit to us and not a hindrance to our operation.
Sure. And I think, one of the frameworks that producers might think of this in is you wouldn't just allow anybody on your farm, anybody on your property. You're not just going to let some random visitor come on. So why would you potentially allow workers access to information that you don't want just anybody's hands on?
Exactly. That reminds me of a tangential topic. So, some farm operations happen under a roof. Mm-hmm. Milk and dairy cows or producing chickens, these things happen under a roof. Growing wheat, corn, sorghum in Kansas happens outside. And so the attorneys on this team use the phrase reasonable expectation of privacy. So if you have a dairy farm, there is a reasonable expectation of privacy that you would expect. Well, if you're growing corn or wheat outside like we do, then there is no reasonable expectation of privacy. So driving down a gravel road, you can park, take photographs of a field, perfectly legal is my understanding. Airplanes over a certain number of feet above the ground. When I say airplanes, there's a lot of discussion about drones and UAVs. But satellites, taking imagery. There's a lot of information, a lot of data we can gather to convert to information from growing crops that under situations where the attorneys on this team, I encourage you to read the paper, talk about the reasonable expectation of privacy.
You keep mentioning that paper, and it really is a great resource. So we'll have that linked in the show notes of today's episode, so that can be found on agtoday.net as always. But Terry, if listeners are tuning in and they want more information in terms of cybersecurity, where can they find that at?
Well, some of my work is on agmanager.info and the Department of Agriculture Economics. There is some work been done. Actually, Alexson was in the private sector when we started working on this. Now she's in private practice in Arizona. Shannon Farrell is a colleague at Oklahoma State University who specializes in this, as well as Paul Geringer at University of Maryland, and myself. We are sort of the academic team. There's a few people in the private sector working in this area, but it's pretty brand new. So I would invite listeners on that topic about where to find more information, in general, to follow me on social media. My handle is Space Plowboy across all the platforms, and I send out information about cybersecurity as we develop it, as well as farm management. Anything in agricultural technology that comes out of my program will be shared there.
Great resources for sure for listeners to check out. But Terry, thank you so much for your time.
Well, thank you, Samantha. It's a pleasure being here.
Once again, that was Terry Griffin. He is a K-State cropping systems economist covering cybersecurity on the farm for Agriculture Today. We'll be back with more ahead on Agriculture Today. This is Agriculture Today. We're back now for our weekly wildlife segment. And to cover this week, we have with us Joe Gerkern. He is our aquatics and fisheries specialist here at K-State. And we've been talking a lot about ponds in the past couple of weeks. But this week, we're going to be talking about dredging specifically.
Yeah, so thanks for having me back. We're going to be talking about ponds when they start to fill in, they start to get older. What do we do about that? How do we save that? And a lot of times, the long-term solution involves dredging. So I'm just going to chat a little bit about some of the things that we might see to indicate that we need dredging and then how we might go about that process.
Like you said, let's start off with some of those signs. I know that plants can be a key indicator.
Yeah, so if you're starting to see too much algae, too many plants this time of year, if they look like they're taking over more than about 20% of your pond surface, that doesn't necessarily mean that dredging is key or needed, but it might be an indication that your pond's starting to get a little more shallow. If you start to see those types of things, it might be an indication that you need some dredging.
When it comes to considering dredging, is there something that makes a pond a good candidate versus a bad one?
most ponds at least eventually need to have dredging done. So they just, things wash in, sediment washes in, nutrients wash in, and so they need to be dug out. Really what we're talking about is how often does that need to happen. One thing that can really make it a lot faster would be the nutrient feedback loop that happens inside of a pond. So when we start to see lots of plants, those plants are going to die off. They're going to die off whether we spray them with an herbicide treatment or we just wait till the end of the year and Mother Nature does her thing, right? And so when the plants die, they settle to the bottom and they break down. So just like if we took a bunch of leaves and put them in a compost pile in our garden, if we put all of those leaves at the bottom of our pond, we're going to make a big compost pile. And that can cause a lot of nutrients or add a lot of nutrients to the pond that then can lead to more plant growth, which causes kind of a vicious cycle, a feedback loop where we're having more and more nutrients, more and more plants, and that can kind of speed up the sedimentation process, making it necessary to then need to dredge.
You mentioned the speeding up of that process. How quickly can this sediment really build up to where you're like, oh, now I have a major issue?
Yeah, so in Kansas, surprisingly, the average age of a pond or the average lifespan of a pond is only about 20 years. And that surprises almost everyone I talk to. So that doesn't mean that every pond is only going to last 20 years. There are maintenance things that we can do, adding aeration or making sure that when we see vegetation, we're killing it early and getting it out of our pond, helping to build a shoreline buffer of tall vegetation around our pond. All those types of things can extend the lifespan of a pond, but on average, about 20 years is all that a pond really lives in Kansas before it needs some sort of dredging. That might not mean a complete dredging where we start all over, but it definitely needs some attention at that point.
When we're thinking about that 20 years, we're like, well, that's not too bad in terms of maybe maintenance, but these can be fairly costly processes.
Yes. So it's surprising as the lifespan is, the cost of dredging is even more surprising. So cost varies considerably, and there's a lot of different factors. Pond size would be the easiest thing that goes into it, but access, how much material there is to dredge, there's lots of different factors. So I always recommend getting 2 or 3 different quotes. As kind of a ballpark area, you can be looking at around $50,000 per acre. So sometimes you can get it done a lot cheaper, but it can be very expensive to have a professional come in and dredge your pond. Having said that, there are reasons to have professionals do it. So it's very easy to go in and dig too deep, for example, and that can cause your pond to leak, cause some issues down the road. So the professionals are very good at what they're doing. Doing something, though, would be kind of the goal. And so if you have a backhoe, if you have a friend with something, that might be better than nothing. So kind of looking at your options might give you some idea of which direction to go.
Definitely some factors to take into account for sure. And if listeners are tuning in and they're wanting more information on dredging and maybe resources as to how to get it done, things like that, where can they find that at?
Sure. So as always, your local extension agent, they have a ton of resources there. Listeners can reach out to me directly. Our KSRE Wildlife Research Extension page also has some information about dredging on there. So those are the sources where I would recommend that you start to get the information you need.
As always, those resources will be in the show notes of today's episode, which can be found on agtoday.net. Once again, that was Joe Gerkern. He is our aquatics and fisheries specialist here at K-State covering dredging. That concludes today's programming, but we'll be back with more tomorrow. For Agriculture Today, I'm Samantha Bennett with the K-State Radio Network.